Good weekend, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for the weekend, and this will be weekly charts. And this is for Friday, the 3rd of February, 2023. Wow. We wake up this morning to a tsunami of jobs. 517,000 jobs. The biggest number I saw was a 300,000 guess, and I flipped through everything. Nobody was at 517. Then to make matters even wilder, they revised the December number, which was a beat, up another 30 or some odd thousand jobs. So we've been talking here that one of the things that's been going on is big name companies keep letting people go. They say that the really small companies aren't hiring. They're in trouble even paying rent, some of them. But the middle-sized, 20 employees or more, they are aggressive in what they're doing. So these people are finding jobs somewhere. In addition, more people are joining the job force. In addition, labor costs have dropped. This is a Goldilocks scenario. You have inflation wobbling. You have people coming in to the jobs. They're getting what they need. The Fed, what's this going to do? Well, Tuesday, David Rubenstein on Bloomberg is going to do an interview. I think it's 11:30 Chicago time with Fed Chair Powell. He's got to be asking these questions. I mean, what a time to have a scheduled interview. And, I think that the Fed chair did a terrible job on Wednesday. I think he gets a chance here to clean everything up. I think the Fed chair is going to say they're going to keep going with the interest rates and they'll have to stay up longer and they'll find that happy spot. And guess what? Their job got a lot easier. If you have people working and you raise interest rates, I know that he wants to see the jobs end. He wants to see where the JOLTS number drops, where the employment number goes up. The employment number today went back to a 1969 low, a 5-decade low. So this is one powerful economy. And with that power, what happens is you're going to see interest rates climb a bit again. The mortgages that went down to 6.09, they're going to climb up a little bit again. But at the end of the day, as I said, it's a Goldilocks scenario. I don't think we have a bad ending out of all this. And while the stock market was down, it's not a crash off of it. So you're due for a correction, but that's the question, a correction. Let's take a look and go through the charts. First, for months on end, I've been saying it wouldn't surprise me if we make a run towards the 18-month moving average of closes. Was that it? I don't know. 41.90 is the number. We got up to 40. Let's see. The 18-week average is 41.90. We, on a closing basis, we got now to 41.47. Do the last 40 points matter? I don't know. They don't have to. You've come from 30.601 all the way up here, 500 points. When you look at the S&P on a weekly basis, you have held and you're staying held over the 18-week average. That gives the market a bullish bias. When you go and you look at the weekly bar chart, I had told you I think we're in levels of resistance, and you still are. I can't get away from that. But the pattern is still one of a higher high and a lower low, and you'll probably get a correction from this week. You still closed very good for the week, up 1.5%. Where'd the market go to? If you're a regular, if you're a subscriber of mine, if you join me in my morning videos, which I want you to do so badly, this is what you were targeting. It's either that number, the closest main moving average, if you have one over the market, or the Bollinger Band. And in the Bollinger Band, voila, they're together. All right? You watch. You're not going right through this. That's my guess. You'll back off a bit here, but you're not trending. What you had is this phenomenal run from December up here that's probably got to cool its heels for a while. Doesn't that make all the sense? This is not going to grow to the sky. The Fed has now got the power. It's going to take its gun, put new bullets in it. It's going to take them into the chamber. I hate to use that. And it's going to shoot them. And that means they're going to shoot them come the next meeting. And I think this even guarantees you're going to get 2 more rate hikes. That's my own guess on the market. The March is a done deal with this jobs number, and you probably now locked in one after that. What does the Fed have to lose? What does the Fed have to gain? Everything. They've got to get their credibility where they can slow this thing down and get control of the inflation. The beauty is inflation on its own has been falling. Why? The supply chains have gotten back to work. That's why. So there's that there. But more people going to work will equate to more demand. More demand will put pressure on those supply chains, and that's the thing that you want to make certain you can control. When you look at where you're at on a weekly basis in momentum, you're overbought. You have an overbought market that came here. If you've taken, and I pray that you have, if you've taken my enhanced Bollinger Band course, you know what I teach on the first challenge. When you hit it and you're not embedded, out you go. So I think at 42.01, the pros were saying goodbye to this market. We'll see if I'm right or wrong. That doesn't mean they're bearish. It means they're out of longs. When we come to the Dow has been just waffling in an overbought area. I see nothing to do here. But the bigger battleground has been the 100-week moving average of closes, the green line, and that began in November. And if you really sit back with me and look at it, you haven't gone anywhere since then. Market can afford to give you a bit of a correction. You closed over the upper Bollinger Band in the NASDAQ. Only 5% of the time does the market stay over or under a Bollinger Band. So you're in sort of rarefied territory. That band is going to climb next week, and I'm thinking prices will slip back into it. Are we trending? Again, you've had this vertical rise since December, week after week. So no, you don't have the pattern of higher lows, higher highs. In the Russell, this has that. And we were talking time and time again, this was your strongest. But I do think, forget today's data. Had the market just closed like this, I'd be telling you, hey, I think there's going to be big trouble between the upper Bollinger Band, the 100-week average of 2043. That's where I'm looking for the pullback. But I think that the market's going to get exceptionally well bought on breaks. Why? You just had another bullish crossover. You just saw the 18-week average get over the 200. Normally, you then make a new high. It's exactly what happened. Then we come to the 30-year bonds. So we've had a pattern of higher lows, higher highs, overbought. Will the market correct a bit here? Why not? That's what I'm thinking. Get under the average here of what is that, 129.10? I wouldn't be then surprised that you get back to the 126.20 level. But am I looking for it to really roar to the downside? I'm not. Not at all. Same in the 10-year. I think that the market got up to the upper band, overbought. I can see it getting back to the 18-day average, fighting a battle there. As for the dollar index, it's still with an embedded reading, and it's going to stay with that for a bit. So unless you have a monster rally this week, I'm going to look for the pros to hit the market. You heard what I said. I think they're going to sell the dollar this week. There's a key moving average. If you've taken my enhanced Bollinger Band course, that's what I'm expecting them to do on a weekly basis. They'll get out if the red line closes over 21 by Friday. Barring that, I think the first thing they're going to do is sell it, which means in the eurocurrency, you still are embedded. I think they're going to buy this market on the break. They're the flip-flop. You do one or the other. You don't do both. I'll be discussing it in my morning video, so I'll give the instructions there in a better way. In the Canadian dollar, overbought, in an uptrend. I can see the market pulling back to the 18-week average and just sitting there for a bit, trying to figure out, what do I do with this mess that the U.S. has delivered at our doorstep? And in the Japanese yen, I expect corrections, but I think this market is baked in that the very next bank governor of Japan, who we don't know who it's going to be yet, but I think they're going to stay on the policy, not of Mr. Kuroda. I think they're going to go with the policy that they've got to leave that super easy monetary policy, and you won't be visiting these lows again. It's my guess. I don't know. We'll see. When you reopen on Sunday night, Take a look and see if you lose the embedded reading. Sunday's not Friday. Remember that as a whole week. But I wouldn't be surprised if the market gives ground on it and maybe puts in its sight the 18-week average of closes. Then in Bitcoin, this could be the spot where you want to take some money off the table. I'm the guy that's been bullish this. My clientele, they know that they've been long, but I think we're there. The weekly chart is now saying between here and the 200-day average, why own it any longer? And if the dollar gives you that surge, what happens is, like you saw in gold and silver, and you'll see that in a minute, they get crushed on a strong dollar. That trade was baked in for a weak dollar. Silver has gone and dropped over $2 from high to low in 48 hours. So I'll show you that in a few minutes. Then in the energies, what's been missing in the equation so far is Chinese buying. India has beaten China on taking Russian oil. And what they do is Russia sends out its oil. It meets another tanker out at sea. That tanker has another blend of oil. They mix the two together. The new oil is not called Russian oil, and it makes its way. I know you think I'm joking with what I'm saying. Folks, this is how it's done. And it skirts the rules and what's going on. Well, as we're here, all we've done is rallied back up to the combination of resistance, right? The green is the 100-week, the red. Tell me that that's all you did. I think so. So this was a bear market rally, no more than that. And now the question is, how much does the market drop? But that opens the door for the Biden administration. This is their dream time. You want to see another $1 or $2 on this, and you want to not see Joe Biden not take to the airwaves and say, hey, folks, the U.S. is going to buy more strategic oil. Shut your mouth. It's that simple. Shut up. Trump had it right with that. You don't tell the market what you're going to do. You do what you're going to do. And afterwards, yes, we have come in and we have bought X million of barrels to replenish our strategic reserves. Don't let the traders front run you. I know the temptation is there from a career politician to do that. Please, Mr. President, don't do it. When we get to the gasoline market, this is what I've been waiting for. This next drop, whatever it goes, when it reverses, that's where I want to be. I want to be on the reversal back up through all this in for the spring and summer rally, if it develops. Am I going to just buy here hoping it goes? No, I need a chart set up. But the parts are falling together. You had this rally into the key resistance of the 100-week and the 18-week average. You've kept the trend down. Let's see if it goes. It should, on the downside, it should find some support as we're getting further and further into this. And people will start realizing, once we're through with this massive, historic cold weather that we're getting out east, I just saw a Caribou, Maine, 104 below zero with the wind chill, 45 below without the wind chill. They unfortunately have massive winds out there right now. But New York, all these cities, they're seeing cold they haven't seen in decades. It's going to end. Chicago's going to be in the 50s this week. As I'm talking to you tonight, we're going to be zero. So the swing is happening. Well, people will start thinking, wait a minute. We're getting closer to spring as that weather comes in. Psychology starts taking off. So I know this. I've traded this all my life, and I play with it accordingly. Am I going to buy the break? No, I want to buy the momentum in gasoline when it turns. I'm not interested in how low it goes. And that brings me to my twice daily combo offer. We package together both a futures and an ETF package. Why? Think about it. SPY, DIA, IWM, TLT, they're all based on futures. So you see what the futures are doing at 5:30 in the morning with me as I start recording. I record again at 9 for the ETFs in the stock. And I am aggressive with the trades, folks. Buy here, sell there. Here's the reason why. Here's the chart pickup. We go through everything. It's all about technical analysis. I use 5 indicators. Each indicator filters the other. What you're trying to do is get to the point where they all say go. If one says don't go, you don't go. It's that simple. And I reinforce this during each of these. And I cover the whole spectrum. And I'm always changing in the SPDR ETF, the makeup. Take advantage. How do you do it? Join me at this. All you got to do is go to our website under research. It's right there for you. You can call my staff. They can get you set up as well. Either way you want to do it. Or you can click up here at any point and join us. Pretty simple. It's exciting right now. This is not exciting. It doesn't get better than this. I'm Ira Epstein. You have a great weekend.